let's continue now. I've got a chart of the All Lords up on the screen, and what we'd like to share with you is a little bit about how the market unfolded from the GFC and how we look at that, you know, in a big picture sense. So it's all very well to look at the percentages and decide how far a market is likely to rise in future in doing a forecast, and we're going to show you that shortly. But this just puts a more of a broader understanding on what's going on the market, and I think it's really useful.
Well, it's sort of like a roadmap, and it's about perception or perspective, I suppose is a better way of saying it. It's like, well, how is this working in relation to something else, or comparison? And so the stuff you've got on the chart is really about understanding how the market's unfolded, and that gives us an indication of where it will unfold or how it will unfold into the future. And all too often, as we discussed a little bit earlier, people tend to look very myopically and say, well, my share went up or down today, or the market went up or down today, but really what does that mean?
Well, they're not looking at a chart, a lot of people, and that's
well, they're not even looking at the bigger picture of stuff, and that's the problem. And so that's what this is more of a roadmap of where we're going. Now, this is sort of based on the theory of Charles Dow.
Yeah.
So we're talking about, so we're seeing the market sort of from around 2004, you see the big bull market right up into the high of the GFC, which is the highest high on the chart that you're actually seeing. So if I put my pointer onto that, you'll see that's the all-time high back in November 2007. And then what you've got there is this distressed selling, and right down into the 2009 low, which was March 2009 low. So you're seeing here how the market just really melted down.
Well, in that initial fall, there was that abandonment of hope, and that didn't happen until some months after the top, and then people were looking to buy cheap at that time.
Well, markets don't crash at the top, do they?
No, they don't. Yeah. And so then there was just decreased earnings coming out, but before the decreased earnings came out, everyone in the industry was still saying, oh, things still look good. Well, that's all very well and good, but the data is lagging, and that's why it's really important to always be looking at a chart and see where the money's flowing. That will really tell you the truth about what they're thinking rather than what they're saying. So down at the 2009 low, after that point, of course, there was a rebound. So it took some time before there was that renewed confidence. And
that was up into that high up here, right into, what was that? That's April 2000, and I can't read that.
2010.
Yeah. I mean, it moved up from that March 2009 low. That's that renewed confidence where eventually it's like we get sick and tired of being sick and tired. So it's like the market's fallen out. We've had that distress selling. It's a big washout. We ran out of sellers, so the market must go up.
But not a lot of people are buying then. That's
Correct.
More the money in the know buying there.
Or it's speculators, one of the two. But yeah, pretty much.
And then it was more or less just a volatile sideways action from there. There was a lot going on around the world at the time with the debt, and the market corrected significantly in August 2011.
It was all the quantitative easing too. I know a gentleman said to me the other day about, with the GFC, and he said, does what you teach work in that? I said, well, yeah, it does. And he goes, I said, the only issue we have is the government keeps playing with things. So when you've got like the GFC, the whole quantitative easing in the US and what we did here in Australia, only delays things a little bit. The market was always going to pull back. It just delays when it's going to do things.
Yeah.
So, and I think this sideways movement was all about that whole period there where the market was putting out all that funding and all those sorts of things. And that was affecting how the market unfolded a little bit, but it always going to bounce and it was always going to start to rise again. And we had all that economic issues, all those sorts of things coming through in there. And as you can see, we really started to rise back up from that point where my pointer is on the chart now, around August 2011.
But it merely went sideways. I mean,
up to
the
then
market did
sideways,
nothing much until September 2012, and then we had some really good gains from that point on. But we call that, when you get a situation like that on the market, we call that period after that correction the improved earnings phase. That's what Dow refers to it as, and you can go right back in history and show this same repeating pattern occur after any correction. And this is what you've got to look for, because everybody was thinking doom and gloom still, even while we're in this so-called improved earnings phase. It's going to be a little bit tough for some companies as they work through that cost cutting, and there'll be people being made redundant, and there'll be all sorts of economic things going on during that time, and particularly regulators, they get much tighter. We've seen this, and it's continuing now. We're seeing
it's like a merry-go-round, isn't it? They loosen up regulation, and then things happen, then they tighten them up again.
They tighten it up after the fact when it's already done. The damage is already done, and so these are the things that you've got to be watching for more so than what the commentary that people are talking about, the doom and gloom that could happen. Just look at the cycle and the phases that are unfolding. So we're still in that improved earnings phase, we think. And the reason for that is because we haven't seen this huge euphoric buying. Although the last few months have taken off, I think we're really just playing catch up for what happened in 2017 with the market just trading sideways.
I mean, the current move has been running so from that point there in 2016. So, I mean, really, the market sort of runs for about 2 years or odd. So,
2 to 3 years, generally.
So to me, it's like we've been running pretty well for nearly 2 years up, and I think there's still some more upside onto that, and we have got some predictions on that, what we think it's going to be.
Well, the next chart will reveal a bit more.
Oh, the next chart was going to say, okay, so we've got more.
We have more.
Up from that. But right now, it's still looking quite bullish. And as you can see, we're still not above our all-time high. So therefore, that's what we were talking about earlier, is we're playing catch-up at the moment.
That's a really important part of the analysis to consider. The Hang Seng is just challenging its all-time high right now. We're not quite as close, but we're getting there.
And we're not going to show you international markets today. We're just going to go through a few of the sectors at this point in time. So how about we bring up the next chart and stop people biting their fingernails waiting to see what it is. So...
All right, now this is a chart that we use in our e-news. So if you currently do not receive the e-news, you're more than welcome to ring up the office and speak to Kathy, and she'll assist you with that. So you can...
well, basically, just if you log onto our website, request some information from us, and you'll be able to subscribe to our news, or you pick up the phone. But just email us info@wealthwithin, and we'll put you on the database, and you'll get that. But the e-news goes out every 2 weeks, and it's also got a couple of podcasts that Jannine and I do as well. So, and they're called Talking Wealth podcasts. But if you go onto Soundcloud, you can type in Talking Wealth and get into our Talking Wealth podcast, or you'll find them on our website. Just go to our website, right down the bottom of the homepage, you'll see Talking Wealth. Right down the bottom right-hand corner, click on that, and there's like 600 something podcasts that we've been doing. Actually, I reckon we've done over 1,000.
Got to that point.
Well, we've been doing them for about 13 or 14 years, so there's a lot there.
We talk a lot. One student actually told me when he signed up to do our diploma course that he went back and listened to all podcasts.
I know, sick puppy.
Okay.
I'd be getting bored of listening to myself for that much, for that length of time. So this is the All Ordinaries Index.
So that's the chart that we attach to the e-news.
Now this is a weekly chart, before we're on monthly chart.
Yeah. And I mean, I think it's really important to illustrate to people in a pictorial sense, because a picture tells 1,000 words. And while all of that doom and gloom was going on, this really gave people something to talk about, I think. And you can see there that the market has now gone up into our target zone. Now that target zone we'd set for 2017. Now it didn't quite make it. It was about 7 points shy of breaking into that zone in December, but it's now pushed through. And it could go higher than that. So it could go as high as 6,370, possibly just over 6,400, 6,450 if it continues this move. But once a market gets into an important level of resistance, that's what we call it. Anyone who's studied the course who's watching, you know what I'm talking about. Then it's possible for a market to turn in that zone. So that's what I'm expecting. But more medium to longer term, I can see I've got an all-time high up there. We're expecting the market to eventually push through and make that new all-time high. And it could happen this year, or it could be in the year to come. But I'll update you more on that as we move forward. Yeah,
we're going to do 2018, what we're thinking. We'll talk to you about where we think the market's going to peak out this year, how far it's going to fall, a bit of some target zones from that, and also some target zones for some of the sectors and what we think is good value right now and where you might be able to move your money. So let's now have a look at some of those sectors. Just quickly, we'll go through those and just show what they've done in the past year and why some of those figures, or why those figures that we showed you earlier actually occurred. So Jannine's bringing up now, she's got the consumer discretionary. Now remember, these are all sectors within the top 200 anyway, or the XJO, what they call the XJO on the Australian market. So consumer discretionary, that's interesting, isn't it?
Now we can see that the discretionary sector really went sideways from 2016, so it underperformed. It was being beaten by people in the market talking about how the retail spending was going to be down.
Correct.
And now we've seen figures come out that retail spending is actually better than they expected. So don't believe what you're being told when it comes to this sort of information. Like I said, just have a look at the data. And generally, I mean, you and I have been talking about this for a while, how the problem with spending now is more so that people are spending online a lot. They're going overseas a lot, which is unfortunate for our country, but it's just the reality of the
Well,
world
I'm sure
these days.
Australia Post likes it, or the delivery drivers like, or the
That's
couriers
right, it
like
goes somewhere else, doesn't it?
So they're getting paid to deliver packages. But you are right. It's like, how do you measure spending? I know they were talking about spending over Christmas wasn't as much this year as it was last year, and they were expecting more. So, but you know,
They were
the
expecting
Amazon
more,
effect.
but right before Christmas, they were really doom and gloom on it, and they dropped the forecast, but it actually was reasonable. But the true figures come out in January anyway, this month. So, and we'll probably hear a little bit more from that area of the market. But looking at the sector, you can see there it's broken out of an important resistance zone. So the top of that's 2,250 points, and the next level overhead is 2,540. So there's still room for upside, and the market there, in that sector there, is travelling in a nice trend. You can see my trend line. If you've read Dale's book, you'll know all about trend lines if you've studied the course. You can see that the market's really tracking nicely to that line, which is really good to see. And so we've still got upside. And I've got, when you study how the share market, you learn about levels in price that are important, where a market may turn up or down, and you also learn about levels in time where a market could turn. And I haven't shown the history of where these turns have occurred for the discretionary sector and where we've picked those turns, but it's been tracking reasonably well.
That sort of stuff we can do on another recording and that sort of stuff, you know. But
so looking now, you can see April 18 is my next date for this sector. So we could see a bit of a reversal occur somewhere around that time, and November 18 is also important.
Okay, let's move on. Let's so making sure that we're covering all the bases.
Yep,
so,
we have energy, which has done really well, as we were talking about before. Now, you'll see some big numbers there on the chart, 29, 37, 24. This is showing you how many months approximately that this sector has risen in any of these major rises. So looking at the all-time high at that 20,254, it fell, and then it was in decline for many years.
That was 2008. So you can see here, by looking at the chart, you're actually getting a better understanding of what energy's done. And it really only been the last year or two that you've been better off being in energy up till then.
Particularly the last 6 months, really. And now, and it's actually defied the potential resistance level that I've got there at around 11,000 points. I had November 2017 as a potential turn. You can see it turned in May 17, pretty much right on time there. And then the next one is June 18. So we could see a lot more volatility from this sector heading around May, towards the middle of the year. But we're only up to month 24. And based on history, and that's what you've got to look at, that this sector can run for, 2 to 3 years.
2 to 3 years. So what's next? There's financials next, I think.
Okay, financial
I'm just trying to read it without my glasses.
Okay, now we can see that big drop that happened in the financial sector when it tried to challenge the all-time high. So the all-time high on the sector was up here, way back.
Oh, okay, let me get rid of that. Sorry. So the all-time high is way back there.
So the all-time high was way back here in 2007, as you can see now. It attempted to move up and challenge that in March 2015. This is when we had the correction on the market that occurred, quite a significant correction on our overall market, and 26% on the financials, and some of the financial stocks fell more than others. You can see a recovery since then has occurred. Now, when you hear about the banks, you'll be thinking a lot of doom and gloom, but the financial sector itself is not looking, it's quite looking reasonable. It's holding.
A lot of people are complaining
bullish,
about the banks at the moment. I'm picking that up, saying, the banks aren't doing as well as other things. But then again, it's what we talked about earlier. It's like money will flow back into those when the big end of town think they're worth buying.
Yep.
And right now you can see here, banking only recently is still way below its previous high. So the more recent high is May 2017, but the problem one before that was, let me bring that up, if I can get my pointer on the right area there, so it's about April 2015, so it's still below that high.
Now, if the market's going to go up and challenge its all-time high eventually, which we believe it will, then for that to happen, this sector
the
has
banks
to
have got to be
rise.
with it.
So that's what I'm really looking at closely now. If the sector falls below last month's low, then it's more likely to fall short term before we see a recovery. But a nice strong move on the financials, and we could see a nice continuation.
Okay, so what's next? Is that materials or
That's healthcare.
Healthcare. I couldn't remember if it was an M or a H.
Yep. Now healthcare's continued. This is CSL predominantly, because a lot of the healthcare stocks.
But ResMed's done quite well though.
Healthcare, well, from a healthcare perspective, ResMed. But stocks like Sonic Healthcare, Primary Health, a lot of those other ones that have been impacted by changes have been held back. So you can see here that November, December 2018 is the date for a turn. It turned right on April, May I've got here August 17 is where it turned right on. Then we've got April, May. So I'm expecting some volatility in the sector around that time, and November, December 18 for another turn.
And what have we got? The information technology is next.
Infotech, looking interesting. So here you can see that it's been quite strong, but only really for the last sort of 8 months or so. Before that, it was sideways for about 3 years. So
another volatile sector, isn't it? I mean, looking at that chart, it's quite volatile, and you can understand why. Information technology is a great place to be, but
not at all, not all the time.
And it's not necessarily buy and hold either. So what have we got now? Is moving on. We've got industrials.
So we've got industrials. So industrials. Now this is usually the heartbeat of the economy. If this is going up, and think about the way that they've been describing Australia and how things are going in our economy, and then just look at this ticking along. Okay, it's not near the all-time high, but it's done quite well. So we've passed that 5,600 point level. The next level overhead is 6.2, which is not too far away, but I've got another level overhead at 6.8. So, and a time for a turn, March 18 or July 18.
Okay. All right, so next is materials. This is where your BHP's into it, your Rios.
This has boomed just recently, so we've seen a turn now. Interestingly, look at the behaviour of this sector. It turned right on that 10,700 point level, and then it's continued to break through my 11,750. Next target, 12,800 for a turn. Now, it may not turn this month. January 18 was a time for a turn, could be March, February. But the next turn date is July 2018.
Well, we're 7 months straight up at the moment, really, aren't we? So it's probably due for a little bit of a pullback anyway. So, but we'll see. But again, have a look at that since the GFC. Oops, I just clicked on the wrong thing. Since the GFC, it's been quite bearish for quite a while.
It has.
People holding
like
those stocks
sector,
in the portfolio, And that if you had those sorts of stocks in your portfolio over the last few years, you're wondering why it's dragging it down.
So this is the whole point of what Dale's trying to explain to you about looking at the sectors and looking at different areas of the market. You can't just be buying and holding and stay in those areas indefinitely. You've got to move. So consumer staples has done quite well recently. We've seen that find support at 9,200. We're heading to the all-time high, which is likely to be a resistance level. I was expecting a turn towards the end of last year. It didn't happen. So we're looking at May 2018 if it gets through that level. Yeah, and possibly September 18.
Okay, so next telecommunications again, Telstra.
Yeah, so Telstra we talked about earlier.
No surprises here, is there?
No, so you can see where it found support at around that 1,200 points. Now I had it pegged at around 1,300 that it would turn approximately there at around August 17. It went down for another couple of months before it turned, and we saw it retrace. And now we're looking for a trend line. We don't have a confirmed downtrend line yet, but we're waiting for that to happen.
The next month or two will be critical to determine whether this is now starting a new bullish run over the medium to longer term. But right now it's a little bit too early.
Yeah, this month's important, and December this year is going to be really important for Telstra.
Yeah, I think all too often too many people get in thinking something's stopped falling and it keeps falling and they wonder why. So right now, a bit too early for Telstra. So from that, utilities?
Yeah, utilities has done quite well for a few months, but like you were saying before, and it has been moving up like the industrials over time, but now we're into more of a sideways phase for this area of the market. So May 18, or actually that should be 17, you can see there.
Oh yeah, May 17 there, sorry, yes.
No, actually May 18 is the next date, so that's where we're expecting a turn to occur. Okay. Now it could continue lower at this point, so until it starts moving back up again, we don't know what the direction is while it's still sideways. So October 18 is another date we've got there, but look, I wouldn't be jumping into stocks that are heavy in this sector at this point in time until it starts moving back up.
Cool. All right. Well, that wraps us up for all the sectors in the top 200 stocks in the XJO. So I hope you've enjoyed Jannine and I having a nice little chat, open chat about the market, what it's been doing. So as I said, we've got another recording where we're going to talk a little bit more about what we think the opportunities are for 2018. So again, go and have a look at our website, look at Talking Wealth. As I said, you can go to our website there. But get onto our YouTube channel. There's some other videos, and we're doing a whole lot of stuff this year. So if you like the video, just click the like button, subscribe to our YouTube channel. If you have any questions you want Jannine or myself to answer, just email us at info@wealthwithin.com.au. Thanks very much, Jannine.
Thank you, and we look forward to hearing from you. Bye for now.
Bye for now.